Good morning, 11:24. I am your host, Nick Shaheen. Welcome to the show. This is one of 3 videos that recap about 125 charts. But first, I'll give you a little blurb about the S&P. But more importantly, look for a better video tonight or tomorrow morning, depends where you are, that forecasts the week. This coming week is short-ish. We have in the US, it's short, and that's it. The world keeps sticking without the US. So we have Thursday off, Friday half day, I believe. Check your schedules. Now, it's tempting to sell risk inside of short weeks, and I've said for a decade, short weeks often bring drama, especially when it's not a short week, it's just in the US short week. And on the other hand, you have people asking about Santa Claus rallies. And also, they say holidays are bullish, so we might close really strong. Technically, the markets are primed for a dip. We have had a sharp rising wedge this past week. You can look at it. And these purple boxes reflect the risk that the market makers have priced into the options, and I'm telling you, they're too small. So the market makers are not respecting the possibility of hiccups this week yet. This is as of the close on Friday. So we shall see what they price in on Monday. But so far, the market is not respecting anything for this week. This is where sometimes blind sides come up. Not a reason to short, it's just a reason to be cautious. Let's get started. Apple is our first ticker. Good morning, people in the room. Thank you for being here. This is a pretty good crowd. So Apple is just like the market, doing market things. It has probably underperformed the market as exuberance. So you don't see a lot of people hodling about Apple. And it's going into these 2 yellow lines that say resistance. It's just where the market had failed before. And that is where the S&P is, the QQQ is. They have recovered their correction of recent days. And they are likely to find some sellers here. So I'm going to delete that one. They do have support below, resistance above. They have the potential, but I don't think they should break out this week. So I would not hold calls for this coming week. I could sell a put spread if you're bullish instead of holding calls. Iron condors might work. ABBV. So the whole sector got hit hard because of political reasons. And anything that has to do with healthcare, foods related, they fear the new administration. So rallying into this white line, 186, 188, should present some sellers. So if I was long and this rally helps me to get out for even money, I would, because I don't know how this is going to play out. If the market struggles in general, this might find itself in the 150s over the next couple of months, and I don't want to be on board of this. This is nothing against the company, just a price action comment. Adobe was cheap in this area. It bounced hard. Was okay cheap in this area. It's bouncing hard. Coming into 520, I don't like it from a trading perspective. If you're an investor for the long term and you got long, that's probably fine. It's going to follow the market in general. It has earnings in about 17 days. I don't like the fact that it's coming into all these lines. These are long distance, long-term moving averages and long-term fighting zones like this orange line and this blue line. So it is not very bullish to come into them from the bottom. Okay. Archer Daniels does not look healthy, although it is inside of a lot of support. So we've said before, somewhere in 2021, resistance, they broke through it. And then they spent a lot of time above it. And then suddenly they lost it big time in January of this year. And they haven't been able to recover. So this R, I could copy paste and drag it over to here. So now that's the problem. Conversely, it has a support zone that is all of this. So yes, it can come down to 42, 43, 44, but it should be a support zone. So if I'm an investor and I'm not out yet, it's probably too late to panic. If I just got long, that's fine. I wouldn't go long all the way. Like if I meant to own 100 shares, I would only buy 50 And if it goes down to the low 30s, I would buy another 50 and forget about it as an investor. I don't know the company, so you should do your homework there. This is a daily chart that shows how they're selling rallies and how we got here. Every rally is sold and they produce a lower low. This rally should bring you 58. And if it doesn't, you might stall here because this is pretty strong support, market correction aside. Agnico, so I'm not a fan of gold stocks up here, just like I'm not a fan. Accounting issues on ADM. Yeah, I wouldn't touch it though. Anyway, thanks for the information. Heads up there. High five. So the AEM slant matches the gold, right? So gold just hit an all-time high. Bitcoin has hit an all-time high, etc. Every asset class is hitting an all-time high. And this one just got back to a prior failing zone. For me, this is an exit point. When a stock takes it so long to come back from 2020 back to here, and this is probably back from 2011. Yep, you see that? In 2011, everybody, I can remember people on CNBC in 2011. Yes, I did watch CNBC on 2011. People on CNBC were like, they couldn't stop talking about how higher can gold go. Remember, Bitcoin wasn't a thing back then, the talking point. So this was the Bitcoin of the world. Like, oh, gold, how could it be up here? You know, it doesn't do anything. Yeah, well, in 2011, everybody was trying to outdo themselves with upside potential price on gold. And then it took a decade hiatus. Look at the dip it took, right? And then it took, it came back to that level and died and during the pandemic. And here we are. Most definitely not a place to start investing in Agnico or any gold thing for me. If I'm an investor in gold over time, awesome. If I'm an investor in gold stocks, and these are companies, not the price of gold. All right, so not for me up here. That's a long not for me up here. Amazon, not for me up here. It's a nope. Amazon, great company. It has all my money and then some. So not an obvious point of entry from an investment perspective. Trading-wise, it has fallen into short-term support. See, everything that says resistance on the left is now support. So this one, I can move over to here, and I would say support, and it should be a zone of support. It's not very accurate. It's all of this. And not very accurate, meaning it's not very sharp. It's a zone, cushion, okay? There's a backup zone below it. And if the market's correct, you might come down to this level of support and target. But this is if the market corrects. So maybe it hits 184 this week. And maybe it hits 212 this week. Those two are probably on the table. From a trading perspective, I could do an iron condor. I wouldn't buy a call. I wouldn't buy a put. If I want to invest in the company long term, I should come up with a strategy. And by the way, this applies to most any good company out there that gives me some money from the support. Like there is support, try to make money off it by selling a credit put spread. Use that money to buy a call spread. I would not buy naked calls. Perfect example of price action versus quality of company. They don't make P&Ls as good as this one often. Arista Network. This is a buy the dip moment on every time. I'm going to see if they're going to make another high, which is I'm going to see if they're going to make a 435, because what is it going to take that long stick out on earnings? This is just unbelievable. So here's the question. Will they lose 366 before they approach this long wick? I don't like a starting point here. Selling puts to own shares, okay, if you have that kind of account. Selling a put spread to make money off of the support, I'm okay with that as well. Buy the dip, yes. So if it falls into the low 300s or below, yeah. ARKK, most definitely, I'm not on board with it up here. This, I believe, is still tied to Tesla. Now, do your homework. I don't remember who's in it right now, but usually most of the ARK Invest ETFs are structured in the same way. There's a bunch of junk in there, but the way they can get around it is by taking the top 10 companies and making it 50% of the whole thing. She's smart that way. So she bets on a lot of junk, but she makes sure that half the ETF has good core companies. Like, Tesla is not junk. And JD and companies like that are not junk, but they have a lot of junk. So this one is tied to Tesla most likely. And if it is, it's not for me up here. It looks vulnerable in order to retrace. Look left, there's a lot of gappy areas below 52. So I think it needs to come down here. Weak. Needs a revisit. That would be my statement. It's trading wise, I would sell a call spread, buy put spread to get that to happen. Okay, this is the one of the best, weirdest P&L you will ever meet, in the sense where if you pull up, okay, what are your margins looking like? Look at the gross cost of goods sold, because they don't sell anything, but then look at the operation expenses. So, I mean, it's hard to evaluate the company because they don't sell things, they sell ideas, they rent ideas. Let's look at the market. It is selling rallies, and I did this ghost pattern, and it looks like it's playing out. So if we were to copy and paste it and see if we can forecast the next, let's see, we light it up like this one maybe. So far, they are selling rallies inside this really bullish market, which it doesn't make sense. So maybe they do the red thing again. I'm trying to line it up to where it makes visual sense. There we go. So at some point, they will hit a bottom. This tells me that long stick that this is a problem zone right there. With another one above it. So it's going to take a lot of work to take out these two lines, and if they don't, they're at risk of drifting lower and continuing this descending channel. Okay, so you see how these targets have almost met a couple of times, even on great companies. Speaking of great companies, ASML is pretty darn good as well, and it too is following these ghost prints pretty closely. So anyway, I'm going to delete it, and we've hit a target. People asked me when it fell on earnings, is it time to get long? I said maybe, but I'm not in a rush. It could go lower, and it sure did. This is our target from a long time ago. So let's zoom back out to see it from a higher time frame. I don't know if they announced a split or what, but they look at how predictive this white path was from here. We drew this path months ago, and okay, so this peak was higher than normal, but we did predict the path pretty awesomely. And now we're into a pretty good support zone. Unfortunately, there's this messy area down here. So at some point, wow, look at how accurate this thing is. If you look left from here, I'm going to take this line where it just landed and point left, and I want you to see something. It's hard to see until I point it out. I'm going to make it this color and that fat. Look at this line right there. Back in 2023 of August, they battled over this line right there. I drew it by hand, and I said they can fall down here, and they did to a penny. So this has been a battle zone since 2023. Anything below it, I would assume, is an overshoot. So somebody started longs in ASML. They did okay. This is a good starting point. What happens to this one if the market has another bad spill, or it's just a small correction? This one can find itself in the 500s. Down here, there's a weak spot down here. If they lose this support, there's a weak spot down here. What am I saying? I'm saying that I wouldn't go all in. If the market's correct, this one can find itself even a better bargain. Okay, good stock to catch though. Same, AVGO, good stock to catch, but almost the same scenario. Why are you underperforming the market when the market could not be healthier? So this whole zone is supportive, but this whole zone is resistive now. Everything above here now is going to be a struggle. They will need a headline to burst through all of this. The target may be 154 that they're seeking, or maybe 150. This yellow box, maybe. I don't mind it here. Depends on how you're going long. Credit put spread okay. Selling puts to own shares okay. But buying calls outright as a trade okay, as long as you have good stopping points. AZO, I don't know how these guys are in business. They're horrible stores. If you're a car nut, you know how bad they are. If you're anyway, somehow they're making their sales work. I don't have any information for you. They have just as many buyers below as sellers above. So I can tell you one thing, which might take a long time to play out. A new high above these recent highs will bring 33.60. You have buyers at 3,000 and change and buyers at 29.70. You better show up at 29.70, because if you don't, I don't think this holds, but they'll have a spill. So it's been range bound for months and months and months. Giant range. Ping pong inside that range, but be prepared. As soon as they break out of the range, above or below, I don't know, they're going to overshoot by a mile. Boeing, many people said, is this a good time to go long? Is this a good time to go long? I always said, depends on how and depends on what situation do you have. If you're not long, it's okay to go long. Is that a bottom? Probably not. It's also a headline stock, so I avoid trading it. The only way I have traded it is by selling naked puts and calls on it. So if you just got long, you're going into a giant area of selling. From here to 158, it's been sold hard for months and months. Look left. So you got back into that yellow box from a while back. That's good. What's bad is everything above here, everything into the red line and above it, that red line is just the high point of volume. I did not draw it. In fact, if I zoom in, the red line will change. But visually, 155 is a problem. So I'm going to zoom in. 155 is a problem. That's my take on it. And you have support below. 141, 142 is support. Better support, 137. If for whatever reason you lose 137, then you have a good entry point. I tell you, I knew it was a good entry point when people started talking about bankruptcies on Boeing. I was like, okay, so that's a little bit much. But smart people started discussing bankruptcies, and I was like, okay, definitely not time to short it. BABA, I wouldn't touch it. We shorted FXI almost perfectly, and I'm not about to buy the dip. Although this chart is falling into a pretty good support zone. Everything below here is support. So we can take this one, copy it and put it here, support zone, clearly, because that was resistance, and you have backup support. So from that perspective, all right, so you're going to be okay. But it's not that exciting for me, because I really don't know what's happening in China. It seems like they're desperate to spruce up business, and I don't want any part of it. And on top of it, this stock is suffering so badly when Wall Street cannot stop buying stuff. And they're clearly not buying this stuff, so I'm not for it. Banks, I'm telling you, there's something going on with these. For me, the thought is that this is a technical rally. AI this and AI that. And AI stock cannot rally when they deliver 100% growth. NVIDIA grew 100%. And the market chose to sell NVIDIA and buy banks. What does that tell you? The premise of the rally is in danger. If they now sell NVIDIA, which they over-delivered on every metric possible, to buy banks, I have no words. So I'm definitely not a fan. What are you asking? Going long? No. Going short? Yes. I am short. I'm losing a little money, but that's fine. We'll see what happens. This is not a place I would start longs at Bank of America. And if I am long, I would ditch my entire company and roll into better stocks. I would not hold stock up here. If I was a swing trader, no way I would be long. And if I am an investor, I should look into selling some covered calls if you know how to do that. Biogen. So what is going on? Are they going out of business? Someone tell me, please. What is happening here? So once they lost 190, the target became, goodness, 120 or lower. Now, they do have some support along the way, I can imagine, yes, into 130. But I wouldn't touch this thing. Technically, it's broken. And theoretically, when you lose a zone you've been fighting for, so this one can be at 110 to 120 with no problem. It's not a forecast. I'm just telling you, if you're looking to buy the dip, I wouldn't start all in. I would get engaged, but only half position. Or I would make it a trade, not an investment. I would go in, I would allocate dollar amount, and I would say, okay, if I lose this much of it, I'm out. That would be a good trade, because if it does bounce, it may get to 185 just from a bounce. BITO, not for me. So Bitcoin broke into an all-time high, right? Look at where this one is. This is not Bitcoin. Please, you guys should know that. This is a company that trades Bitcoin futures, and then they try to put it in a chart and pay you a dividend if they're making money. So Bitcoin has never been higher, and it's never been more bullish. You can go on Twitter and find out how many people are bullish Bitcoin to $2 million. It is misplaced trust that the new administration is going to take Bitcoin to $2 million. I don't think they're going to do anything for Bitcoin, but they're not going to stand in its way. So from that perspective, this one is too late to start positions in this one. But then again, if you're investing for the long term and you're taking 10, 20 shares here and there, that's fine. I wouldn't say, oh, I want to invest in Bitcoin. I want to make dividends. Here's 2,000 shares, boom, all at once. They don't pay dividend every month. Look back, there are some months they pay pennies. Okay. BKR, Baker Hughes. I'm all in. What is going on here? Is it because drill, drill, drill? I think it's easier to pump, pump, pump. So figure out where they get their money. This here is a nope, not an obvious point of entry. Not an obvious point of entry. Technically, the breakout from 39 should have 55 in it. If you're a technical trader, that is a thing. But now you're also, if you're a technical trader, this has been sold hard. So if I'm not long this thing and I think it's just breaking out, I will buy the next dip. I wouldn't buy it here. That's my trade. Who is this? What the? What do these guys do? Provisions of nuclear. Yes. Okay. So chart's not going to help you. Do your homework on the industry. This is like the pot stock company. Everybody that has nuclear say, hey, you know, we're going to look into nuclear energy. Yeah, it seems overdone. The chart's not going to help you. Do your homework on the stock itself. If you're asking me about the chart, this here is not an obvious entry point. Where would it be, 117 or 107? BX, I meant to reshort it. I shorted it and lost some money. I meant to reshort it, but since I don't know what the fuck is going on in there, I'm not going to do that. This looks like this one. For a while, it was stuck in a range, and now it's going to the moon, like this one. It definitely overshot to the upside, not knowing the company and what they do. I have an idea what they do, but not knowing exactly what are they chasing, because the P&L is definitely not that. Maybe I'll short it one more time. So if this is such a good company, what is it rallying on? I need to do homework. Give me your thesis if you know it. There's no improvements in the sales. In fact, it's shrinking, and there's no improvements in the bottom line. So where is this enthusiasm coming from? So I might put it back on the short list for this one. It's already there. So we'll see. Regarding Bitcoin, do you think it's a bubble? If so, how many other crypto? The question on Bitcoin, do I think it's a bubble? Ed, I don't know what to say about the bubble. Do you think gold is a bubble? Bubble to me is something that is not supposed to be here. It is supposed to be here, but not all at once. So bubble, it's overdone. Short term, yes, that's my estimate. And mind you, I am long crypto at some level, so Okay, CELH. If I am stuck in a long position, any rally that gets me out with less pain, I would. They are selling rallies. They get a good rally and then they give it back up and then a little bit more. That's what happened. They rallied, they gave it up, and then lost a little more, and now they're rallying. So now the area of 32 becomes a problem. Why? Because of this earnings reaction from before. So if you put a box around that, now you're looking at a problem area from the earnings. So it's as an investment, if I bought it as an investment, especially if it's a half position, I wouldn't add here. If it's an investment, I wouldn't stress it every minute of every day, but I definitely wouldn't make my problem bigger. Okay, so some stocks are chosen. If I'm long the stock, I would exit right here. Because especially if I was long from here or here. So if I got my money back, I'm out. If I'm looking to start a long, I wouldn't start into a prior fail and then a fail above it. If I'm long, I would exit from a trading perspective. If I'm looking to short, I wouldn't back out yet. Because it might find itself at 27 again from a trading perspective. None of this stuff is comments that I said about investing in Confluent. I don't know what it is, so... Cord Energy Corporation. So an energy company that's trading like this, I wouldn't touch. Because energy companies are so beloved, and this one has an improving P&L, but not before then. So I'm not sure why this is trading all the way back down to here. Must be EV related. All right, so let's talk technicals. Anything above 148 is a struggle. 148 to 156 technically is a struggle. Use that information to manage your risk. This is where it bounced before. So I can tell you it must hold 120. If you lose 120, I don't know how low it goes. Cigna. Stuck in that blue box still. The earnings reaction. And I don't think it's going to be easy to get to 344. I think it's easier to drift towards 308 than 344. And if you do, you better hold 305 or 4. You better hold this line. If you don't, you're probably going to end up in the 280 zone. It just looks heavy. Chipotle, not for me up here. So it recovered. We bought the dip on that crazy CEO departure, and it outdid itself recovering. Now you have everything above the white line is going to be difficult. Good job last week, popping above the earnings reaction. I don't understand how that happened, but the 65 zone is difficult. If you ask me what to do with the stock, I would short it. How I would buy a debit put spread pretty wide 3 months out and forget about it. Opportunity to double my money. What if it goes higher? Then I would risk losing a little bit of money. This stock, so if we have, I don't know if we do, if we have any stocks like Mara and MSTR and all of those, they are rallying with Bitcoin prices. So these stocks, their fate lies in what happens to Bitcoin for the next 3 months. If Bitcoin doubles, they might get extra lift unless the market corrects. If the market corrects, they will fall with the market, not hang out with Bitcoin. If Bitcoin corrects, and by the way, Bitcoin corrects about 50% every year. This is not a mathematical number. Look it up. It does lose half its value often, maybe twice a year sometimes. So if that happens to Bitcoin, these stocks are going to get killed, absolutely demolished, regardless of what the market does. So if I'm an investor in coin and I'm, ooh, yay, I would sell covered calls like you wouldn't believe in order to lower my price entry point. And I would lock some profits. If I bought 100 shares, I would ditch 30, 40, 50 of them, 60 of them, and leave the rest. But it all depends on your intentions. If I bought the shares as a long-term investment, hey, you may not want to do anything. I would never own shares without selling covered calls. If you're looking for an entry point on coin, I wouldn't touch it until it goes back to 230. That's me. So I would do this. I would go like here, put an alert, and take it off my watch list. That didn't happen. Okay, so the alert I wanted down here. And I wouldn't touch it. I would take it off my watch list. Why? Because you missed it. The easy money has been made. Conoco, oil stocks are stuck. This one is stuck. You see all these red bars? Those are prior sellers. So there's going to be selling here. It is an opportunity. If it gets to 117, maybe it overshoots to 122. Otherwise, it's easier to drift lower into proven support. From here down to 104. So selling a put to own shares, okay. Selling a put spread, okay. Make money off of the support. Buying a call, not okay for me. CRM, if you ask me what to do with the stock, I would short it responsibly by buying a debit put spread out in time, maybe a put butterfly. So let's put an alert here and see. Wait. Oh, earnings in 9 days. That thing may run into earnings. So it may rally into earnings, or does it drift lower into earnings? Who knows? I don't like to invest or trade heavily in a stock into its earnings. But if you want to take a position going into the earnings in the intention of taking it off, that's fine. They're tricky. So this here, I would say this is not an obvious point of entry. Cisco is still a short on rallies. The wick from the earnings, just like that other stock earlier, that's a lot of work. Yes, they might want to go out and touch it, but to get out of it, it's going to be difficult. So they are buying dips inside of a very nice ascending channel. But at some point, the channels become toppy formations. And the way that you would find that out is by making lower lows, these are 2, before making a higher high. So I would consider this as test 1 and this as test 2. You see how it is easier to lose this zone down here on the bottom than it is to take that out, and for certain to take that out. Markets have never been higher. Enthusiasm has never been higher. There are no bad headlines, and everybody has the most bullish attitude I've ever seen. And this guy has these 2 lines to cross. This may have seen a top. I can't call a top, but you can track a topping formation. I wouldn't be long calls. Same. I wouldn't be long calls. And hell, I'm short UAL a little bit, lost money. I will double down at some point. I don't understand it. I don't understand this love for airlines. Wall Street is so crooked. They are disgusting. And this one is breaking out. That's even worse than UAL. I haven't looked at UAL. 2019. So this is the pandemic when they all got buried in debt. And now they're clearing the pandemic. So in theory, this one goes to 82 or higher, in theory. I don't think that's going to happen. I think it's a great short. Look at this monthly target that they just achieved. Let me peek into UAL to see. Yeah. So how about I say it nicely, though? This here is not a good starting point for investors. That's probably the best statement. This here is not a good starting point for investors. It might be a good trade. I'm not sure if you're fast enough and you have a good stomach. There's so much downside potential. It's not even funny. Wow. That's crazy. This might be cheaper than UAL to short. I'm going to add it to my watch list to see maybe I'll flip out. I'll split my short between this one and the other one. Datadog. Somebody said WTF. Yeah, I see why. When I read it in your comments, I was like, I wonder why they're saying that. What's going on with Datadog? We bought the dip in Datadog. Holy crap, man. I don't know. I don't know what that rally was about. But stocks like this one, like Upstart and all these stupid stocks from the pandemic, they have so much more upside where the idiots follow them up there. That you probably have the same person that bought it here and lost money buying it here as well. This here, I can confidently tell you, is not an obvious point of entry, although the target might be 175. Okay, so if you're one of those crazy people that likes excitement, jump on board. If not, you missed it. You friggin' missed it. What are we waiting for here? This is hilarious. Oh my gosh. We knew there was support, but who knew there was a magnet up there? Look at the P&L. What did they say? Does somebody know? I mean, it has a good P&L, but Geez Louise, it did not deliver a double in sales. This does not look like a double in sales. Anyway, woo! Oh my gosh. All right, look at this, Deckers. We did change tickers, look. Okay, are you the same person sending me both of these? What are you asking me here? I don't have inputs. These, I don't. Look at this crappy. This is such a. Can I cuss? I want to cuss so badly here. Like, what the hell? Someone explain this to me. Look at this quarter. Quarter here, quarter there, quarter here, quarter worse. No, no, not for me. Most definitely not for me. Whatever's going on, it has to do. When the stock does this, I don't even have it. I kick it out and I never touch it ever again. Out of my watch list. If I own shares, thank you, Lord, I would make my money off of it and walk away. If you think it has more upside, then you're seeing something that I don't, and you read something about it that says, oh yeah, the sales are going to triple or something. So stay in it. The chart, very tough to trade successfully. Just garbage price action, not a garbage stock. This is garbage price action. Not for. I don't have an advantage. If I don't have an advantage, I leave it alone. And then you have a P&L like this. Look at this beautiful P&L. Super solid, super consistent, and the stock does this. This is the dumbest Wall Street I've ever seen. I have never seen a dumber Wall Street than this one. I honestly have. Logic need not apply anymore. They chase stocks that are not supposed to be chased, and they ditch stocks that are good. This is a good P&L. Terrible concept of a store, but don't touch it. If you're long the stock, it's too late to panic out. That's the base from 2017. If you're looking for an investment, why this one? Why now? Do your homework. Like, it's called Dollar General. You can't have anything cost $1 anymore. You go in there, there's probably not one thing that's $1 on a consistent basis. So that alone puts doubt in the whole concept, right? All right, if I'm long, I'm not doubling down. How about that? Digital realty. I don't know. P&L. The bottom line is pretty wacky. Is this a dividend play? If it is, I would be very, very careful. Look at the net income disappeared. If this is a dividend play, not good investment for long. I don't know, Tansim, on Dollar General. What makes it a good investment? Wall Street hates it. Investment for long. Maybe, but why? Find out why. The fact that it fell all the way to here is not reason to go long. Why do you want to invest? So if your brother-in-law owned this company and comes to you and says, I need money, would you take some of my shares and in return of your money? You say, okay, here's $100,000. Let's go build this company. Sell puts. But why? Why would you sell puts? I don't want to own this share that, listen, the market has never been more bullish than this. I say this with an exclamation point, not even the .com bubble or any time ever before this. The stock market has not, only for a trade. I don't sell puts in a company I don't want to own shares. So no, not for me. A trade, buy a call and trade. Don't sell a put to own shares. I only sell puts in a company that I want to own shares. Now, if I've just bought the shares and I'm down 20%, that's a different story. But if I'm looking for an investment, okay, so you're going out to dinner. They give you a plate that could be crap or maybe tastes good if you put a whole bunch of stuff on it and wait. Or they give you a decent other plate. Which one would you pick? The decent other plate. So you're up to the table of stocks. Why would you pick the one that is deemed crap? If you see something that other people's don't, okay, there you go. That's your trade. So I'm saying go do your homework. Find out if Wall Street is wrong and have a reason why. The fact that it fell from 250 to here says that there were idiots chasing it at 250. Doesn't say that it's a good deal here. So I do remember this rally, and I always said, what the hell's going on? So is it a good investment? Maybe. Do your homework. The chart is not going to help you. This one is, it's in a breakout zone. and you have to trade this long stick. I guess it's shortable against this long stick. I don't know anything about it. I want to present the fact that the net income is dwindling, and if this pays a dividend, they're probably going to come out and say something about the dividend. And if that case, it'll be collapsy. I don't know any of that. I'm just telling you to look it up. So let's look here. Cash from operations. Okay, so they do have cash from operations. So that's probably not anytime soon. So just do your homework and figure out what the heck is going on with this company, what it is and all of that. The chart says it's too high for me to start longs. Somebody asked about Doge. Did you mean crypto Doge? Okay, what did he expect me to tell you? Buy. The last time I bought Doge was 9 cents, and I traded it. Up here, it's not for me. If you're looking to buy Doge, it's not for me. First of all, I would not invest in Doge. Doge is a coin. In other words, it doesn't do anything. It has a small ecosystem where people use it as money, but if I were to invest in crypto, I would invest in other things. My crypto plays are either Bitcoin, Solana, Ethereum, or Ripple. And at this point, I'm a seller, not a buyer of all of these. DXCM. So a couple things about it. I thought it was a bargain back here when it fell into oblivion from up here. So what is your question? Can it go back to 106? I don't think in your lifetime. It's going to take a long time to go up here. So if you're stuck up here, you better formulate a plan to get you out, or stay long and sell some covered calls in order to bring down your price to here. If you're looking to invest, okay, it's not a bad starting point from the chart. I don't know the company. This makes me worry a little bit that on the last earnings report, they were willing to bring it down to 60 even just for a minute. That is weird. Like, why would you take it lower than the past freak out moment? So my guess is that it could come up to 88, best case scenario. And if the market corrects, this one may lose 62. May. I wouldn't short it. It looks like well-consolidated zone, but the zone is pretty wide. So ELF, the dip was buyable. We did discuss it with a few people. If you did buy the dip, I would exit here for a trade. The buy the dip trade is done. Now you're running into a sell the rip mode. 135 should be a problem. It can be a catalyst if they want to go to 155, but it looks like a selling zone more so than a buying zone. FCX might be a good long for the long term. It has fallen here several times before, and that has been a target from a long time ago. We drew this in hindsight, but that is a technical target. They went to it once, bounced, went to it twice, bounced, and now they're falling into the same zone. So it can go to 42, but it has support from here through 39. So if somebody wants to trade it up from here, that's fine. Everything I just said, flip it and apply it to resistance. Anything above 49, 48.50 is resistance. So if I'm long here, I would exit at or into the white box. These are trading comments. Investments, it's not a bad place to be. Fiverr, I would be out. This is one of those stocks that during the pandemic, people lost their mind and people bought. You had people paying $340 for Fiverr. I mean, that shows you who's invested in this. This is a crowd I don't want to be in. So when this stock, where it has this stable P&L, it's not like anything changed over time from here to here. Nothing changed. The P&L is still about the same, right? And then somebody found it okay to buy it at 340 or 330. I don't want to be involved in the same universe as that investor. Clearly, there's something going on in their minds that defies logic. Okay, so technically, this is a failing zone 1, 2, 3, 4, 5, 6, 7 times. This time might be different, but if I'm long from here, I am out. Thank you very much, and buy the dip back into 27. With that, video number 1 is over.